Hello, my name's Paul Niederer, and this is a re-recording of the Roger Hamilton event that was held in Brisbane recently. And in it, I gave a presentation on how digital disruption will affect your investing and the raising of capital. Now, as a bit of background, I've had a lot of experience in the capital raising area, being a founder of ASOB International, the world's first equity crowdfunding platform. And in there, they said that Paul has experience in both accredited and unaccredited investor raises. Internationally, he's known as Mr. Governance due to the fraud-free reign he managed when CEO of ASOB. And more recently, I've been involved in Wealth Migrate and assisting them to expand their operation around the world and move investment from predominantly emerging countries into the first world markets in real estate in the United Kingdom, the United States, and Australia. Now, when we look at what's been happening, it's really, really interesting to see that companies like Airbnb is now the world's largest accommodation provider, yet they don't own any real estate. And Alibaba, the most valuable retailer that has no inventory. And Facebook, the most popular media owner, and it creates no content. And Uber, the largest taxi company, yet it owns no vehicles. And this digital disruption is easily explained by these two circles. You have technical disruption, which is the entrance of the internet into the private capital formation process, bringing new efficiencies, which basically means you can have lots of smaller transactions flowing between people instead of having to go via intermediaries like banks. And on the other side, you've got a cultural disruption, which is a desire for people to connect more meaningfully with the things they buy, the things they do, and the things they invest in. And at this intersections is where platforms and other businesses are growing and expanding. And of course, it's the nucleus of what you call digital disruption. And each of these platforms, in the end, they create their own communities. Like Uber drivers create a community of Uber riders, and Xbox developers create a community of Xbox gamers, and Airbnb rooms create a community of Airbnb renters. And each of these communities, each side attracts the other, and they're all outside, you could say. It's their own external ecosystems, which makes it really, really interesting in terms of both marketing and growing a platform. And cars are now emerging as a platform where you can have things in there that communicate how you're driving. If you lend it to your kids, you can see if they're doing circles on the road and things like that. You've got all sorts of things can be ordered from your car as you're driving past. It might say, oh, there's a special here on the shop you've just passed. The same as cities. Cities is completely in terms of a community that can tell you about the weather, the rain, your trip starting, finishing, things like that. In the Internet of Things, which all of us are part of in terms of whether or not it's our refrigerator, our air conditioning, or different appliances in our house can now be turned on and off remotely as different items connect into the internet as a platform. And of course, the smart grid that we're getting with energy as parts of the city can increase and decrease consumption based on various different settings. Education also is becoming more and more of a platform. And healthcare, your ability to actually take responsibility over your own health records and then share them on your own permission-based reasoning is also taking part. And of course, the one that's probably most obvious to a lot of people is the in the finance area, in which the word blockchain is used quite a lot to show that the evidencing and the credibility of information is more and more being put onto the internet. And that's where Wealth Migrate comes in, the company that I've been working with for the last couple of years, that they have effectively put real estate on the blockchain. And what people do is they sign up to the website, they select an investment, they then transact online, and then of course they can manage their portfolio, which may be in many different countries and many different properties, and it's all there on that one page. Now, in terms of the other interesting aspect about platforms is that platform-based communities communicate in many, many different ways. You can have meetups and hackathons, which is in person. You can be on the web in terms of either mixed reality collaboration or real-time expertise sharing, or on the mobile in terms of a dedicated app. You can actually be around the product in which it can communicate and provide a sense of community. Or there might be agents and bots, or augmented reality or virtual reality. So there's many, many different ways that these communities can communicate. And in terms of capital raising, my presentation today is going to pretty much focus around these three areas in terms of the story or the pitch, the team or whoever's going to be doing the implementing of the opportunity, or empathy, mean the people that love it, and traction, as if they put their fingers in their hands in their pockets and pull out money, which gives traction. So when you look at these three circles, you can see that the story, to have a good story, it has to have clarity, has to be compelling, has to be convincing, and the storytelling has to be extroverted a bit in order to come across for your opportunity or your raising money is going to be, people are going to put their hand in their pocket. And of course your team has got to be capable. They have to be grounded, balanced, passionate, experienced, enthusiastic, credible, capable and likable, so that as they implement, you get that feeling of credibility that enables you to get the traction from followers, supporters, advocates and influencers, partners, sponsors, investors and customers. So it's these three circles I've used for the last 10 years in assessing every new business opportunity, so that as we go through, you'll see how that works and how it can be beneficial. Now, in tandem with this, then there's always a pathway that a raise goes, and in the big overview, there's the pre-launch when you're getting ready for that raise. There's the launch, it goes live, and then there's the post-launch. And in those areas, you get ready, you get engaged, and you get funded. And in order to do that, there's a number of steps. You've got to have a good plan, and then you've got to prepare in terms of your business plan, your documentation, public relations strategy, things like that. And then you've got to recruit. You've got to add people to your team, like ambassadors and influencers and people that will share and help you. And then you've got to attract them into your team in terms of getting them locked in there so that they're in there and ready to go. And then once you've got that, you've got to enthuse them, because they've got to go out and tell the story and build the buzz. So you have to empower the ambassadors and send plenty of good information to the influencers so that they can share that. Now, once all those people in your team, then we're ready to promote. And once we promote it, whether you're holding investor meetings or you're holding a launch party or pitch events or things like that, that's the promotion stage. And you move on, and when people are there, you have to engage them. You have to engage with them to make sure that they move along the trust curve, so that they get more and more interested in what you're doing. And then eventually, of course, you accept the money, which is great. You accept the funds, and then eventually you've got to deliver the promises that you've made. So that's, those three circles, and this is pretty much how I've run raises in the past, and it seems to be a very successful future. Now, for those in the audience in Australia, it is a little bit complicated in terms of the different ways you make money, but I tried to make it simple on this particular graph. On the one side, under the Fair Trading Act or the Trade Practice Act, you've got reward, pre-sale crowdfunding, you've got utility tokens, where basically the regulator's not involved. That's an area where you can go out, and as long as you don't rip people off and you deliver what you promise, you're going to be fine. And at that area, the friction costs and the time costs are a lot less. As we move along there, we get to the Corporations Act, where we've got non-disclosure situations like the small scale offerings legislation. And then we get further over to the right is where the Corporations Act and disclosure, where prospectuses and offer information statements and crowdsourced equity funds and ICO security tokens live. And this is the area you can see the unhappy face at the top of friction and time costs. That's the area that people find disconcerting, because it's hard work. And the further over to the other way you get, the easier work is. But when you do a raise, maybe in the beginning you do a reward pre-sale crowdfunding raise or a utility token. Then you might move to a small scale offering. Then once you've got the money there, then you can go on to the prospectus. Or some people might start directly at crowdsourced equity funding, because the the thinking behind that legislation was to make it easier for people in a disclosure environment. And for some people it has been like that. So the three areas we're going to look at today are the reward pre-sale crowdfunding, the utility token, and prospectuses. Now, in all of these raises, somebody is supporting the raise, and the more people you have supporting the raise, the more chance you've got of success. So let's look at this reward. Now, when we look at crowdfunding, there's many different platforms. You've got hundreds of them all around the world, but we're going to predominantly rely on Indiegogo for this part of the presentation. Now, Indiegogo, what I liked about them is they've had a number of good raises, but this one in particular, which is a bit south from where I live at Byron Bay, they managed to raise $13 million from 38,000 backers, and that means they actually sold 38,517 beehives. And, you know, that's a wonderful achievement to do from a small town in Australia and sell them all the way around the world. And so when you look at the story, team, and traction part of it, the story was great. If you see that picture there, that if you wanted to get honey, you'd take your jar out there, you'd turn a knob, and out would come pure honey directly into your jar. And the story was, you know, in a good environment as well, because there's many people around the world that are concerned about the bee population and would love to have a beehive in their backyard. Now, the team, it was a father and son team with lots of experience in beekeeping, and they gathered a professional team around them, so that part of it was fine. And then in terms of the traction, there was just millions of people out there that thought this was a fantastic idea and a fantastic way to save the bee population and contribute to the world and get good honey and things. So even though people thought that was a good idea, which was the empathy of it, that they were empathetic with the idea, when they put their hand in their pocket and pull out the money and paid 38,517 of them, that's the traction. That's when you got traction. And so in some ways, if you were scoring it, you know, I'd put nearly 10 for the story, 10 for the team, and 10 for traction. And, you know, it's 30 out of 30. And, you know, you wonder how the thing could possibly fail. But that's how it was. And you can go onto their website and you can watch this wonderful video that they have there and see how they actually did this. So if we recap in terms of wanting that convincing, compelling, and credible story, the balanced, passionate, capable, and likable team, and lots of empathetic people to share the story with and engage, then you can see that for this particular capital raising or fundraising opportunities, they really hit all those well. And of course, they used the platform Indiegogo, which is proven for these type of raises, and did a very, very good job. So Indiegogo did a good job for them. Now, I'm working on a campaign at the moment which is similar, which is about young Noah. You can see young Noah, he hasn't born so long ago, but you know, he's got a life fraught with risk because of people as he grows up want to take his nose. And this particular organization are working on some security fencing that is going to have special sensors and communications and things like that to put a safe, secure environment for the hundreds of rhinoceroses in the area of South Africa where they are. So they want to, first of all, start with a small area where Noah's going to be and provide the fencing and the sensors. So that's the story, and there's team, like there's people there that have been doing this for many years, and good people in the security part of it, and then the traction, the empathy, and that's what we've got to get out the story to the people around the world that believe that you know, rhinoceroses deserve a better lot in the world. So that's sort of the nucleus of a story of what I'm working on in terms of particular capital raise, and you can see that as we build it, we'll work through the story, the team, and the traction. And to do it, we'll build up a timetable through to launch in the different phases, which I mentioned to you, the pre-launch, the launch, and the live. We'll look at the story and the team and the traction. We'll look at influencers and ambassadors around the world. We'll find out what sort of rewards and things that people want if they provide money. And of course, we'll get the team members involved in it. So that's sort of going through a process. So if you yourself are looking for an opportunity to raise capital, then this is a good way to think think about it and build up, because before you actually get out there and start asking for people for money, you should really know where 40% of your money is coming from. Otherwise, it just will never get that traction. To move from that empathy to traction, you need that already set up. Let's look at utility tokens now. And when you look at, some of you might not be so aware of this, but basically instead of having a prospectus or an offer document, if you're raising cryptocurrencies or doing an ICO, as they call it, which is an initial coin offering, a white paper is produced. And that's basically a paper that says, look, if you invest in this, this is what we plan to do and why it's going to be good for you. And a token sale is just the process of generating and selling a new cryptocurrency. And while the details may change from sale to sale, this process involves building a smart contract on the blockchain, generating and then selling the resulting coins. So this is an entirely new area for capital raising that has just emerged in the last 2 or 3 years and is pretty live at the moment. If we look up at the top left, here's a group of people that would be thinking about doing a capital raise, and they think, right, okay, how many will we need? And they'll create a jar in which that's where all the coins will go. And as you can see, we've got down the bottom there, investor A and investor B. So they will think, well, this is a great idea. So they send money to a particular, what they call wallet address, and the address is set up by the people that are sitting around that table. They'll send that money to that wallet address, and it ends up back in that jar. Now, as they develop the opportunity or the product or whatever, you'll see the red top part of the jar and the pointing down towards the fire. Well, money gets burnt. You could say that they have to spend money to develop what they've promised to deliver to that investor A and investor B. So that's pretty much it. Deciding on amount, marketing to investors, they send it to a wallet address, which ends up in the same area or the same jar as the team have got. In order to achieve the objectives of the raise, then some of it or all of it may be burnt in the process, and hopefully the value they create is value that will reward investor A and investor B. So in terms of the story, often you've got to see, well, is this are we really going to get money back from this? Is this going to work? Do the team seem to be credible? Are they able to deliver? And then is there evidence that this thing are there other people investing? Has it got traction? Is it on an exchange? Can it be sold? That sort of thing. So there's all those sort of different type of things come into this story, team, and traction area. And today, of course, the sharing of this is predominantly done not by, it is done by pitch events to probably in the early stage of the raise, but eventually it's actually marketed through people sharing the opportunity on their phone from person to person. If we go to the third one now, which is the offer information or prospectus or personal offer, these are offers that are usually done within some regulatory system. And often it's done with a prospectus or an offer information statement or some legal document that backs that up. And that's when you invest globally in real estate, which is exactly as it happens. And with Wealth Migrate, the vision is to make global real estate investing as simple as a swipe of the finger. And you are able to do it from little as $1, which is wonderful if you think about it. If you can just swipe your finger and $1 goes into a property in the United States, United Kingdom, or Australia, it's there, it's locked into an earning opportunity that then in 5 or 6 years it will grow. Now, the platform predominantly works with emerging markets, emerging economies that are investors are wanting to shift their money into first world economies, so that if their currency is declining or degrading, they are able to at least secure some of their money at that point in time at a rate that's a bit higher, and then it can grow in that particular currency, whether that be in the United Kingdom or United States or Australia. And able to do that, you have to set up a platform or investment process that is transparent and easy to use, where you can sign up, you can select the investment, you can transact online, and then of course that you can manage your portfolio. Now you can say, well, why have you chosen real estate? And one of the main things is that the majority of the world's wealth is held in global real estate, and it's pretty much been inaccessible to the man on the street. You could say only 12.9% of the world's population have got access to real estate. But when you look at the other figures that are quite scary, that less than 1% of people in the Western world retire wealthy at the age of 65. And what Wealth Migrators wants to do is that they want to focus on the 99%, so that with technology, with the platform, with the blockchain and all these things, it makes it accessible to the other 99%, so that they can invest like the top 1%. That's well, it's not only theory, it's a practice. That's how it's happening now in terms of the actual platform. And so it means that global real estate investing is made easy. It's done in minutes. It's easy to create true global wealth. The company's working with quality partners. You can get the best opportunities, and you can invest from as little as $1,000. Now, as I had said before, we'd like to get this down to $1, but it's still around $1,000 at the moment because of the friction costs. It still costs too much to move money around the world. But once the blockchain is more integrated, it will be a lot cheaper. So no hassles, no management issues, no complex global tax structures needed. You just log on, invest, and it ends up in your own portfolio. And some of the buildings are things like this medical center. A fine building, a good quality building. It used to be a Siemens building. I've personally visited this one and seen the quality of it. But, in the end, it's near a hospital. And so some smart people thought, right, let's convert this over for medical use. And so the story of it is that the medical sector in America is, by looking at it from all the real estate surveys and things like that, is the number one most attractive markets. You've got healthcare, and then you've got industrial, then you've got data centers, then multifamily, then student housing. Where number one is actually healthcare. And so you can say, well, why is that? And you say, well, medical buildings, they're recession resistant, you could say. Like, people still have to go to the doctor. When times get bad, they still go to the doctor. And doctors are generally good tenants and they, they're not that fussy about the long-term leases. They want to get in there. They want to have their office, and they want to serve people, and they don't move. They're there for a long time, and so they're good to have as tenants. And then also the demographic trends, with the baby boomers getting older and needing more and more medical care. Of course, there's a continuing flow of new tenants there. So that's why medical real estate. And there's many beautiful buildings and lovely places that are in demand and are highly tenanted and give very, very good returns. And the statistics of it often are that 8% in quarterly distributions of money is not unusual in this sector, and it can be done better than that too as well. Now, when we look at the team, one of the most important things is that you actually partner with somebody in the country, on the ground. In the case of Richmond Honan here, they've had 42 years of developing regional centres of excellence that are based around healthcare. And in terms of Wealth Migrate, there is a complete team of people that are in the acquisition and due diligence area that look after these areas and make sure that before it gets put out and puts up into the platform, that they've gone through that medical center and find out that this is a good investment for it. And in that process, they use something called the GIDS system, which is the Global Investment Due Diligence System, so that it points you in the right direction about where to invest, when to invest, what to invest, who to invest with, and how to invest. In terms of traction, you can look at the statistics on the platform in terms of like 70% repeat investors is a good one. So people come back and invest again. There's 68 million has been invested by clients to date, and 4.5 million has been paid out to clients so far. And there's members from 111 countries. So it is truly global, and it is functioning, and people are earning. And in terms of one of the things is, if somebody says we're going to pay you 7% or 8% or whatever, what they actually pay. And so you can see in that graph there, the blue is the forecast, the green is the actual, and you can see they're pretty close as we go. Some are up, some are down, but overall you could see it's nothing to get upset about in terms of the performance has been very close to what it's meant to be. So that's in the that area of the regulatory environment and investing globally in real estate that Wealth Migrate is doing very, very well. And what when you look at the this whole area and you look at that platforms are exploding, that crowdfunding is moving along in the flow high and Noah, and you saw like an ICO crowd sale and investing in Australian real estate, investing in global real estate. All these are very, very different areas and there's different information. So what I thought I'd do before I finish that part off, I'd just speak to you about something I'm finding particularly exciting. It's called DAO, DAO, and that stands for a Decentralized Autonomous Organization. And what I'd suggest you do, there's a video that is included in this presentation, but you can find it by just making the search term for Aragon, Aragon, and you'll be able to see that, what it is. And that you saw that Aragon come up then, just the text of it. Just up here, Aragon Alpha. If you search after Aragon, you'll be able to see this video, which tells you all about it. But that's where we are moving in the future, in which DAOs are going to be, you could say, organizations that are managed by smart contracts, and you won't have managers in the same sense that you have them now. You're going to have a structured opportunity in which multiple people will join together and decide on the rules, and then the smart contracts in that DAO will run a bit like a cooperative in the old days. When you think about a cooperative and somebody said we need a dairy factory, how do we do it? 40 or 50 farmers would get together, they would create the cooperative, they would build it, they would run it all themselves, and then they'd pay themselves the dividend for the milk fat and the buttermilk and all that sort of thing. And so DAOs are something that's exciting come along. So watch that Aragon movie, have a look at it, and if you want to be updated on this with hand-picked information on blockchain, ICO, DAOs, capital raising, global collaborative investments, real estate investments areas, then I do have a newsletter called Oz Whisperer that you can subscribe to, that where you can get information about the medical centres, the white papers, the DAO, the opportunities and things to communicate with you. And at this stage in the presentation, what I did was a bit of crowdsourcing. I said, okay guys, look, we've covered a lot of topics, we've been through lots of things, but if you're interested in medical centres, please tick on the paper that's being handed out. If you're interested in Australian opportunities, please click on there. If you'd like to support Noah, click there. Or if you'd like to subscribe to Oz Whisperer, or if there's something else, like you're really interested in DAOs and you'd like to be kept up and date with those, then click that and mention it. I can organise for that. If you want to be part of a capital raising mastermind, a property mastermind, an investment mastermind, or be part of the funding magnet Genius Circle on Roger Hamilton's platform, then do that. So we handed out that form and we got hundreds of people that filled it in a part of it. So if you weren't at the event, then please make contact and send that through to me so that you can also be part of that. And that's the end of the presentation, and that pretty much gives people that missed the event the idea of how my presentation went and what you missed. So thank you very much for listening and watching.